It's Monday, March 13th, and we're going to get the deep dive going here in just a minute. So grateful for everybody that always joins for the deep dive as we get the week started, talking about the topics that are most important in real estate and ones that matter. We're going to do that this morning. If you saw the video, we're going to talk about prices, what experts are saying about this year. We have a new home price expectation survey in, and give you all that information so that you can, ahead of the spring market, give people the education, the information they need to make a powerful and confident decision. As always, let us know where you are watching from as you join this morning. So good always to see so many people from across the country that join. We are grateful for your support of the deep dive and being on here to start your week. So a couple of things to get started here before we kick it off. We'll let folks join for just a minute or two. I wanted to make a comment, though. Certainly there's a lot of buzz. I've been on the phone this morning, and actually I'm jumping on another event right after this, just talking about some of the chaos that's in the market, all of it kind of relating to the end of last week with the Silicon Valley Bank issue. And I think the question that most people have right now is, is there going to be additional fallout or what's going to be the fallout from that? And so we're continuing to watch that and sort of understand it. I will tell you, on the front end of this, it's very clear there are kind of two sort of issues. One, I think that's positive for our business, and one that's negative. The first positive for our business is that this will give us, in the short term, we're already seeing a little bit better, favorable mortgage rates, and we're already seeing the 10-year Treasury falling, and you should look for more favorable rates today. The other issue, the more negative, I guess, issue is it's increased uncertainty for people, sort of cracks forming in the economy and issues that happened to deal with this bank. And so we're going to continue to watch that. But I always want to remind you, as we start off this deep dive, talking about pricing, that in times of uncertainty, people follow the certain. This is a classic example of uncertainty versus certain. You saw the federal government step in this weekend and say, we're going to create certainty for the bank, and all the depositors are going to be made whole and have access to their funds. And that's our job in housing: control what we can control and create certainty for those that we serve. And certainly that, if you're a KCM member, if you've been following the deep dive, you're well versed in that. You understand the power of certainty, right? In times of uncertainty, people are going to follow those that are certain. So we want to give you that certainty and do that relative to pricing. If I were to give you just a little, I threw an extra slide in here today, and I'll start off here and share my screen. But this will be a look at interest rates, and we've used this for the last couple of weeks, a few weeks back, and you've seen this before if you've been following the deep dive. And we talked about strong buyer demand below 6%, good buyer demand between 6 and 6.5%, limited when we get above 6.5%, and above 7, seeing weak buyer demand. If we kind of think about this and sort of mark some key pieces in time here, around the first week of February, you see the Fed come out and say maybe we're not out of the woods relative to inflation. We start to see rates take sort of the escalator up and go up there. And then this sort of line right here that's forming, which is on Friday, which we saw a little bit of relief in mortgage rates relative to the information coming out about Silicon Valley Bank. And so we're going to continue to watch this, continue to give you the updates, but no doubt likely in the short term here is going to mean a little bit favorable mortgage rates for us. So let's sort of shift the conversation to pricing. That's what we're here for. And I want to give you all the information, the latest information on pricing, so that you have that, you're equipped with that to have conversations. And certainly as you sit down with people that are asking what is happening with home prices, we want to be able to give that to you. So first, I'll start a quote here with Rick Sharga. He says, we're estimating that about 5% drop nationally. Some markets, believe it or not, will probably see prices continue to increase. So, Rick coming out saying, hey, I think nationally we could see up to 5% drop in home prices in the coming year. Or in some markets, some appreciation. You saw Zillow come out and say the same thing. Some markets will appreciate, some markets will depreciate. No doubt, we're seeing a world where what is happening in one market's not happening in another. A market that was overheated is reacting differently than maybe a market that wasn't. And this question starts to form: what is actually happening right now with home prices? Well, the home price expectation survey came out and they gave us what they believe will happen this year and the years following. This is always important, and people are interested in it. This is a look as of the Q4 survey, the most recent information of what they say the next 5 years will look like in real estate. So to remind you, the home price expectation survey is a survey of 100 top economists and housing market experts that they say, okay, what do you believe will happen with home prices this year and the years that follow? And you can see here the forecast for this year, about 1.6% depreciation, and then much more normal, I'm going to call it appreciation, going into the years that follow. Average appreciation in this country has been 3.8% going back for the last 20 plus years. And then we hit years in the last few of COVID where we saw outsized dramatic appreciation in home prices, but returning to a much more normal level of appreciation in the years to come. But certainly looking at this and saying, okay, they're forecasting we could be at a slightly negative to I'm going to call it a flat market going into 2023. The other graphic that we like to use is the survey of what everybody is saying. And this is a look at the home price forecast for this year by the particular source, by anywhere from realtor.com on one end to Fannie Mae on the other. Now, you may notice if you followed this graphic or seen us use it on the deep dive, sometimes we have different ones on there. The reason for that is maybe forecasts haven't been appreciated, or maybe altogether they're not forecasting anymore. There have been several forecasters this year that have said, we're not going to forecast home prices, maybe a function of, just the volatility in the market. But you see here, the average of all these forecasters slightly negative there, but anyone from Fannie down 4.2% to realtor.com saying 5% appreciation. So we want to keep a look at this. We want to say, okay, how is that going to affect those that are in the market right now? How do they educate themselves? And what is the true sort of measure of pricing? If we look at going back to about the middle of last year and how much prices have fallen from their peaks, pretty much June through December, it's the best information we have right now in same home sales. And you see anywhere from Moody's at 1% to Case-Shiller and Black Knight 2.7%. That homes have lost value over that time from the peak to where we ended up the year. Now, if you take sort of the example that we just used and take 1.6% there from the home price expectation survey, you'd see a total, kind of drop in prices about 4.3%. So if we take, Rick's initial quote about a 5% drop in price, we look at where price, same home sales have fallen from the peak and add in the home price expectation survey, we see 4.3%. That gives you sort of an idea of where prices are at right now, not this precipitous fall of 20% that maybe some people called for a year ago. And I do think there will be, in this latest round of issue with the Silicon Valley Bank, there will be people that will use that to say, okay, here it comes again. Here comes the wave of foreclosures and price drops and all of that. And our job is to be educated and to be the educator as we head into the spring market. Odetta Cushy said this: the green shoots of spring home buying are beginning to sprout, but the recent uptick in mortgage rates may have clouded that outlook. The good news for that is we may see some relief here in the short term of mortgage rates, and that would be a good thing for those looking to buy. Certainly makes a home more affordable and more advantageous as you go out and look. So I think this brings up one question. I want to cover one question that is, I think, at the top of just about everybody's mind right now, and that is, should I buy a house? Should I buy a home right now? This yes or no, what do I choose? And in a time like this, where you see interest rates that have risen, certainly over the last couple of years, prices have risen, that question comes into one that people say, I'm not sure. I don't know if I should buy a house, or maybe even, to be very, very blunt, people saying you shouldn't buy a home right now. Well, I want to give you some perspective and maybe a couple of graphics to use as you answer that question. And the first one is, if you're not going to buy, you have to rent. And oh, by the way, rent is going up. That's the bottom line. If you're going to rent is going to go up next year. When you buy a home, the largest, line item in your budget remains fixed. You get that payment at a fixed point. Rent will go up. If you want to know how much it's going to go up next year, we'll have to tell you then, because we don't know. But that line item in your budget remains fixed. Now, here's the reality. If you've been to the store lately, you know that $100 doesn't go as far as it used to. Well, oh, by the way, how far does $100 go on your mortgage payment? The same as the day you bought it. In an inflationary economy, you want to get a fixed payment for the largest line item in your budget. So that's the first point. Rent's going up. A housing payment remains the same. Second thing, home prices appreciate. Well, if we go back to the home price expectation survey, we're seeing a little bit of forecasted depreciation for this year. People say, well, if interest rates are going to come down and homes are going to lose value, I'll just wait till next year. Well, my response to that would be, what do you think everybody else is going to do? What do you think people are going to do at that point? They're going to rush back in. Those that haven't done something this year or next are going to come in. There's pent up demand in the market, and they're going to rush back in. So I certainly want to educate people on this. I'm not looking to convince somebody to do something they don't want to do, but by far, if we look at historically what homes have done, they've appreciated. This is a look at the last 30 years in home price appreciation. The average home price appreciation in this country, 289% over the last 30 years. So I don't want to make light of 1.6% because it's real money, but over time, home ownership works. Homes appreciate in value. And that leads to the third point. That's number one creator of wealth in this country. If you take an average price home of $400,000 purchased this year, even with the home price expectation survey, over the next 5 years, that's worth just over $54,000 in earned equity. Real money that people use to maybe start a business, maybe they use it to send a child to school, whatever the case may be. It's the way that people in this country overwhelmingly build wealth. And so from understanding rents, understanding appreciation, and understanding what that means ultimately to equity, I think it's our job to be the educator, to put content out there, to get in front of people so that they understand those things, because it's certainly not what we hear when we turn on the news. I want to give you one more slide. I think this is a really good one. It's a survey from 1000 Watt as we wrap up here on the deep dive. 90% of homeowners in recent surveys say they're glad they bought the home they're living in. We see so many, sort of headlines that say people have regret of buying a home. People are regretful of the purchase they made for this reason or another. But no doubt, if you look at this survey from from 1000 Watt, people are, excited and glad they bought the home that they live in. So no doubt, being able to keep that information out there. I think anybody that bought a home over the last couple of years and has a 2 3/4 interest rate, they're going places and bragging about that as a reality. So we want to give you the best information so that you can go out and be certainly the knowledge broker for those that are looking for this type of information. I want to wrap up before I invite Jess back in for the questions. Tomorrow we are doing our webinar spring market update. We're going to give you 3 unique listing opportunities that are in the market right now, but give you KCM spring market update. This is always a popular webinar. I want to invite you to attend it. If you haven't done so already, you got to go to trykcm.com/webinar, and you can register and join us for that. We would love to have you. So Jess, I'm going to pause for a second. Any questions that we have on this morning?
Hi, Dave. I did see, I think, just 2 questions come through. The first one's from Cameron, who said, if prices are hyper local, shouldn't we encourage our local following to simply ignore the national trends?
Well, I think it's a great question, Cameron. I wouldn't say ignore it, but what I would do is, because here's the reason I wouldn't say ignore it. When they turn on the news or they read an article, they're educated at the national level. So I think your job, Cameron, is to say, here's what's happening nationally, but let me show you what's happening right here where we're at. That's your best way to combat that. Not ignore it, but understand it and then tie it back to what's happening right where we're at.
I had a figure that was going to be your, I had a feeling that was going to be your response, Dave. But think that's definitely important. We had one more come through from Robert who said, is it okay to tell folks that stocks/Wall Street has depreciated at a higher rate, so real estate is still safer?
Gosh, I think that's, I'd want to understand that a little bit more. Here's what I would say. I would say in an inflationary economy, which is what we're in, housing is one of the best hedges in an inflationary economy. Okay, so I think maybe in what you're alluding to is, do you want to put your money in the stock market, or would you want to put your money in housing? And I think we can say no doubt. And if you followed KCM, or you can go to the KCM blog, or if you're a KCM member, grab this content to show why housing is such a good investment in an inflationary economy. Again, I go back to what I said before. One issue or one great benefit is you have a fixed housing payment at that point. So that is a really, really good thing.
Awesome. Thank you for that,
Anything else?
Dave. Yep, I did just see one more come through. Somebody asked about the webinar. They asked what time that was, and if they're a KCM member, will it be via Facebook or will they log in?
I believe it's at 2 p.m. Tomorrow, but you can go there and confirm that. I believe it's 2 p.m. and it will be a webinar. It will not be on Facebook.
Yes, so you'll get a registration link. Once you register, you'll get that link to attend via Zoom.
Yep.
And do you have time for one more, Dave?
Sure. Yeah.
Okay. Last one said, can we expect rate hikes to slow down and expect more action in our market, specifically in a place like South Florida where we still have low inventory?
Sure. Yeah. So when you say rate hikes, I think you're referring to the Federal Reserve rate hikes. Federal Reserve does not control mortgage rates, and we need to get that word out there. But I do think what you've seen in the last couple of days is going to slow the Fed down. This is all about inflation. This is all about what's happening economically. And this certainly is a time where, as unfortunate as to say, is bad news is good news for mortgage rates, and good news is bad news. Okay. So the bad news of this bank issue over the weekend is going to bode well for mortgage rates this week. So I do think you will see a little bit better mortgage pricing, which if you talk about the South Florida market, and I think it's like just about every other market in this country, not enough inventory, but will bring those buyers back out.
Awesome. Thank you for that, Dave. I think that was all the questions.
All right, wonderful. Well, thank you. And thanks everybody for joining this deep dive. It's always so fun to start off the week with the deep dive, talking about what's most important in housing. So we'll see you back next week, and take care.